excuse me. Let's get started talking about building your plan. Now, on your screen in front of you, you can see a little download button for handouts. I've put together 3 special handouts for you tonight that are only available in the live class. But they're only available in this class. You can't get them in the recorded class or after tonight. So please click on the little download buttons next to them. Download them on whatever device you're using, and then you can move them about all that you want. But I've given you a day trading guide handout that'll explain to you all the little ins and outs of trading properly. I've also given you a guide to how to build a 4-point trading plan, okay, as well as an introduction to technical analysis. These are for you to use at your leisure and are courtesy of investing.com and LegacyFx. Now tonight in our class, I'm going to use the term security. And this is used whenever I'm talking about a tradable financial instrument. This includes stocks, bonds, commodities, futures, indices, mutual funds, options, Forex, CFDs, cryptocurrency. Okay. And while I may sometimes imply a specific example, I might say Bitcoin or I might say Apple. Using for example, I'm talking about any and all publicly traded investment or financial instruments that are available in the open market. But it gets very, very boring just saying security, 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 or share, share, share. So I just mix them up to make it more interesting to give the class. Similarly, I also intermix the terms investing and trade. Now, all of us tonight that are attending the class, or most of us anyway, are here because we want to be traders or we are traders. Most of us are also investors. We have retirement portfolios and long-term investments. We may invest in a business. We may invest in our house. We're also investors. Now, typically, an investor takes a long-term position while a trader takes a much shorter-term position. In either case, though, the concepts we're going to talk about, well, pretty much apply to everything and anything in the financial markets. But I intermix these terms only because, again, it gets very boring just saying trading, trading, trading. Now, tonight we're not going to be talking about technical analysis or fundamental analysis in principle, but it's all part of your trading plan. So in order to become a successful trader, you need to develop a written trading plan where you put all necessary trading rules. Basically, a trading plan is your trading Bible. And anyone who trades without a written plan is making a big mistake. Now, there is no such thing, though, as the ultimate trading plan. No two traders are alike. Ladies and gentlemen, can you hold on one second? I'll be right back with you. Seem to have a I'm sorry, I just seem to have a small problem with the screens, and now I got it fixed. Okay. Sorry about that. So there are no such thing as the ultimate trading plan because there are no two exactly the same traders. And every trader has a different style, a different strategy, risk tolerance levels, and market experience. It is always better to develop one's own personalized trading plan and modify it as your experience grows. Now, originally, I've been giving this class for several years. And when I first built this class, I actually looked online, searched all over the place to find a guide, not a hand, but maybe an app, something that would help you give you a step-by-step question and answer scenario on how to, to fill out to make your trading plan. And do you know what? There was none available. Still to the day, I haven't found one because it is a very personalized thing. Too many traders think they don't need such a thing, or they just want to get on their platform and trade. Now, as most of you know, I've been trading now 45 years. And when I started trading, we didn't have computers, and we didn't have the internet. We didn't have computerized charts, and we didn't have Excel. So we did everything by hand. And still to today, I mean, everybody laughs at me, but you come into my desk and look in my office, you see all of these file cabinets with these little index cards files packed full of all the cards that on every trade I've ever made. Because I never carried them all over to Excel. Today I use, the computer for everything. But this is a history of all the trades. I still have all the charts because back in those days we had a hand chart, and the markets were a little bit slower. A lot slower. There was only a few of us that were actually trading private accounts, but it became important then, and it's just as important now that doing your studying, doing your analysis, not of the markets, but of yourself, and having a set of rules in which you make a decision trade, not a trading strategy. Trading strategies are part of your ultimate plan, but they're only a little bit of a part of it. This is an insignificant amount because you're simply determining whether with a strategy, whether you're going to buy something or sell something. Well, it's a lot more complicated than that. And this is why too many traders lose their money, leave the markets, and say, it's a ripoff. Nobody can make money. Making money is no different in trading than it is in opening a business. It's hard work. Now, sometimes there's a misconception you need a highly involved market knowledge and years of trading experience to be successful. However, we see often that the more information we have, the more difficult it is to create a clear plan. And that's one of the problems we find in today's market. We have information and data flying at us. We have apps and scanners and everything else just giving us all of this stuff that really makes it too complicated for us. Too much stuff coming that we're trying to incorporate. And one of the reasons that you have a trading plan is you ignore most of the stuff. You have a very specific guide, and you decide what you're going to follow. So more information tends to create hesitation and doubt, which in turn allows emotion to creep in. This can prevent you from taking a step back and looking at a situation objectively. If you don't know where you're going, any road will get you there. In trading, if you don't set out a plan for your trades and develop strategies to follow, you have no way to measure your success. The vast majority of people do not trade to a plan. And this is why you see 76% of the people are losing money. Okay? Plain and simple. The vast majority of people do not trade a plan. So it's no mystery why they lose money. Trading with a plan is comparable to building a business. We are never going to be able to beat the markets in general. It's not about winning or losing. It's about being profitable overall. So a trading plan is basically a checklist or a template for trading the markets. Now, I don't know if any of you have ever played professional ball, soccer, football. I mean, I played golf. I was on the golf team in college. Golf, yeah, but golf. But you know what? When we had a tournament or we had an event or we had a competition against the next university, okay, that was one round of golf. Well, 18 holes, 36 holes, 72 holes, but that was it. But how much did you practice before you went to the game, to the tournament? How much did you study the greens, the lie of the ball, the weather, the winds? You had a caddy who was giving you information and tips all the time. How many times did you practice your putt uphill, downhill, sideways, right, left? You practiced on your woods. You understood exactly where the crosswinds were. You knew exactly where you had to drop your ball on the first shot. Where the lies were. You knew where the sand traps were. You knew where the trees were. You knew all this. You didn't just get up blindly, swing a club, and hit, get a hole in one. Football players, professional athletes, tennis players, practice for hours and hours and hours. And before they get up the place to trade about an opponent, they know everything there is about an opponent, his strong points, his weak points, his good sides, his bad sides. They know where the sun's going to be. They know the wind temperature, the heat temperature. They know everything that's going on that day. But not on top of that, when it's over, they watch all the films of every swing they made. They find their weaknesses or strong points, where they made mistakes, and they learn from them. You tell me, why does a trader have to be any different? Okay, tell me that. Well, this is what makes us some successful, and this is why many of us lose. I mean, yes, you can be a weekend golfer. You can play tag football. You can play tennis in the club championship. But that doesn't make you a professional. Now, you can come be a weekend trader if you don't mind losing your money. But we're all here to do one thing: make profit. So when trading, as in most endeavors, it's important to start at the end and work backwards to create your plan and figure out what type of trader you should be. Now, I know when my brother played in university football team, he would spend hours and hours and hours studying playbooks. You'd hear him in the middle of the night reading these playbooks, memorizing these playbooks. He'd be writing them on the wall. I mean, he would spend hours and hours and hours, because it's not just about going out on the field and coaching. It's not about necessarily the sports. It's about memorizing and learning every single play. He knew where he had to be at every single play. Whenever that ball was snapped, he knew exactly what he had to do. Okay. And all this came out of working in books, writing it all down, researching it, reading the plays, learning and mastering them. Okay. So the most successful traders trade to a plan, and even have several plans that work together. And they always write things down. Why? Because it helps you stay focused on your trading objectives. And the less judgment we have to use, the better. A plan helps you to maintain discipline as a trader. It should help you trade consistently, manage your emotions, and even help to improve your trading strategy. It's also important to use your plan. Many people make the mistake of spending all their time creating a plan and never implementing it. On the other hand, we have all these traders that trade but never implement, never have a plan. Now, it sounds like it's an endless task. Am I going to write all this down? Why am I going to write all this down? I've already decided I'm going to trade when Fibonacci retracements hit 38.2 and it's near a support and resistance level, and I'm going to do this when RSI breaks 84. Okay, well, okay. But when you write it down, you're going to notice, okay, I left out some steps here. I'm jumping to conclusions, too many points. I need to fill in these gaps. Because when you write things down, it's like when you sound things out. you realize not that they're wrong or bad, that you've just missed some steps. So a trading plan structure should include your monetary goals. What research and education strategies using, whether it's fundamental or technical, your money management and risk management, your timing, your trade mechanics, documentation, and your testing. So make sure you do your own research and build a plan according to your needs. Now, yes, all of this sounds like it's a lot of time and effort. But you don't need to start out by building this huge, involved, complicated plan. Just like you shouldn't have a huge, involved, complicated strategy. Strategy should be pretty plain and simple. I'm telling you, I look at some people's charts, and they have so much on their charts that I can't even decipher what they're looking at. You know, some of us think the more information, the more technical analysis, the more lines we drop on charts, the more we're going to make a decision, a better decision, or outsmart the rest of us. Okay. Figure out first what tools you have selected for your strategy. Okay. And you can have multiple strategies. You can have one for Bitcoin. You can have one for Forex. You can have one for gold. You can have one for central bank meetings. You can have as many as you want for strategies, because your trading plan is still built around these strategies. It's what am I going to do? How am I going to do it? This is how I'm going to make my decision. Your strategy is simply, basically, how you're going to enter the market. Okay. Now, the tools you have selected for your strategy are key. From the type of chart to the specific drawing tools to even the most elaborate strategies. Test your plan in the beginning to make sure you are on the right track. After you've begun trading, continue testing it regularly. This allows you to measure your success for clearly seeing what works and what doesn't work. And that's the key, is finding out what works and what doesn't work. And as you're modifying things, that you're actually writing them down so you remember how you're modifying them. Because from there, you can tweak elements that might be weaker and not contributing to your overall goal. Ask yourself the following question. And the answers to these will all assist you in the foundation of your trading plan. But am I making profit? Am I making good trades? Why am I trading? That's the question you should be asking. If your immediate answer is to make money, then you should stop right there. If the only goal is to make as much money as fast as we can, we are ultimately doomed, because it will never be enough. Managing your loss should always be your primary goal. Because if you can always limit your loss, the profits will come. And what is confusing to many people is just because you made money doesn't mean you made a good trade. A losing trade could have been an excellent trade. Whenever you get out with the minimal risk, the minimal loss, and you followed your plan exactly, you executed a perfect trade. Just because it didn't go in your way didn't mean you were wrong. Okay, man, you executed everything like you should, and you got out of a losing trade with very small loss. Because as long as you can minimize your losses and you manage your losses, when you have the winning trades, they'll far exceed your losses and you'll end up with a net profit. So this is what will create the environment in which profits can be generated. So I know you're all sitting out there saying, this guy's a lot of BS and this is a lot of work. Okay. So the question is, where do I start? And you should begin your trading plan with your strategies. Okay. Plain and simple. And so if you're trading price action setups or off key structure levels or structure trading or advanced patterns, then that's fine. Write it down. Okay. Don't leave it open to just in your head. Write it down that when I see a triangle form, when it breaks out, I'm going to measure my momentum this way and I'm going to enter at that support level, not the price, but your set of rules. Because again, when you write it down, you realize you've missed some steps and you'll fill in the blanks. Okay. So start in a central thing that you already have and then work out from there. So in addition to your strategies, you need to start putting in your risk tolerance and your money management rules. If you're trading and don't have risk tolerance and money management rules down, you should close your account and walk away and go home. Because otherwise, you're going to lose your money and be mad eventually anyway. Because money management and risk tolerance are more important than anything else. And they're more important than your strategy. Because otherwise, you know what? Why don't you open up that trade tomorrow for $10,000 and lose your money and go home and have an empty account? So having written strategies with your risk tolerance and money management, it's like having a market blueprint. The blueprint is essential for developing the discipline that will lead you on the road to success. If you find yourself not following the rules of your trading plan, then you're deviating from your plan. Now, if you decide to open a business tomorrow, today's the world of the internet. You decide you want to build an app, you want to open up an online store. Well, do you just get online and you make up a store and click on a button and open a store? No. You have to do research. You have to decide what product you're going to carry, what prices you got to sell for, arrange for credit card, maybe arrange to have inventory, or maybe today the easiest thing is to open up an e-commerce store with drop shipping that you never have any inventory and you never have any real big investment except your development and your marketing and because all of these people that open up online stores, I think the world's going to run to their store the minute they open up, are in for a shock. No, they find out they got to have huge amounts of money to market to get people to come to their store. Just having the hottest handbag at half the price of everybody else isn't going to do you any good if nobody knows you exist. Okay, so you have to have a plan. They have to have a business plan. Otherwise, they end up being little mom and pops and never exist and never grow. They got to start out with a plan. They got to figure out, okay, I'm going to work my job, okay, because I'm going to be able to do all this, from home in the evening. Well, that's fine. Who's going to build your store? How's your store going to operate? What credit cards are you going to offer? How are they going to get paid? How are you going to supply the goods? What drop shippers are you going to use? How are you going to forward the orders? Now, again, today they sell all kinds of packages where you don't need to know anything. They give you the inventory, the product. They even give you a white label website because they don't care. They've got virtually no investment till you start selling their goods they're making profitable. But again, you don't make any money till you brought traffic. And this takes research, time, and effort. So it doesn't matter whether you're building an app, opening an online store, whether you're opening a grocery store, whether you're going to be a football player, it doesn't make a difference. Okay, you have to find what goal fits your trading style. Now, some traders use technical analysis to make decisions. Others, you want more probability and reward ratios. Some will use only central banks decisions. But after determining some of the types of analysis you will use, it's time to develop a trading strategy. And that's not tonight's class. We have all kinds of classes in technical analysis, fundamental analysis. But you decide whichever is both. So once you've got your strategy, that becomes the core. It doesn't have to be lots of words. You can do it in a beautiful step-by-step little comment, little note section. You do something that's fast and easy. Okay, but then you start coming down to outside your strategies. What hours am I going to trade? What hours am I free to trade? Okay. Because all of those newbie online traders that are flocking to this market, the thing, if I don't have a meeting at 4 o'clock, I'm going to go online and trade. And tomorrow at 2 o'clock, I can go on and trade. And you know what? The wife's got the kids at soccer. I'm going to go trade tonight. Well, all of a sudden you find out, again, you've lost all your money. Because, the markets are different and have different personalities, different times a day. Different strategies will work different times a day. Just as when the European markets open up and economic data is coming out, you have a lot more volatility. During the day, it's less volatility and more it'll react more to news headlines. Okay. As the U.S. markets open, it starts to react to the morning out of the U.S. What's earnings reports that are coming out, economics data is already mostly rolled out at 8:30 in the morning, and so you can't just bop 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 bop. Part of your trading plan is limiting the hours and the days you're going to trade. Me, I'm an early morning trader. I trade mostly Asian markets overlapping European markets. That's it. Now, this doesn't mean I'm not looking at the markets. Doesn't mean I'm not looking at my open trades. Doesn't mean I'm not doing analysis. But you need to have lots of hours of a day to do the rest of your research. You don't spend your day trading. Trading should be the least part of your day. So it's important that you maintain a trading journal which logs all of your trades. This is important because it allows you to analyze your trades and the success of your plan adopted by you. You include your entry date, your entry price, your exit point, your stop loss, your investment. Today it's easy. You have an Excel spreadsheet, you put it all in there, then you put your big comment, because you want to be able to go back and look at that trade, not just next week, 3 months. When Bitcoin goes back up to 19,000 next year, you want to be able to look at those trades you made last year when Bitcoin was at that price to see what you used for your analysis, what worked and what didn't work the last time it was here, or the last time the markets went into volatility because something went crazy. Okay. We can look at, if war breaks out, what happens to these assets, and it's not what happens, what happened. It's what setups did I trade when this was happening the last time that were successful, and which setups weren't successful. So there's a word I use, and it's called stick-to-itness. It doesn't exist. But it's the creation of a trading plan that you stick to it. Okay, it sounds like it's a lot of boring work, and it really is. But I guarantee if I ask 100 traders if they can send me a copy of their trading plan, I guarantee you it'll be the highest rejection level I get. To be honest with you, nobody in 40 years or 45 years of trading, 15 years of now teaching, has anybody ever sent me their trading plan. Nobody's ever sent me a set of Excel spreadsheets and trading plan and said, is this work for you, or would this work, or can I adjust? Nobody's ever sent me anything when we talk about trading plans, because most traders think it's a bunch of wasted time. So why are you, unlike business owners who generally have a business plan in order to provide a strategic vision to employees to stay focused on their primary line of business, most traders never take the time to create a business plan or a trading plan. Now, there are already 1 million articles on the web about trading plans. And there are. But like I said, I couldn't find one trading plan. There's all these garbage out there saying, you need to have a trading plan. This is what you should include. But there's nobody out there that tells you specifically. It's just words out there. Nobody walks you through it step by step. Okay. Now, one of the most important things you need to have in your trading plan is how you're going to evaluate your performance. Are you going to sit down once a month and evaluate it? Well, yearly, monthly? How are you going to evaluate? Corporations release all of their financials every quarter. They have to. They work very hard, and they have everything for the street, and they have to release it if they're publicly traded. Okay. Now, they're up against time frames. Okay. We're not. Do you know, in our world of trading, time is totally irrelevant. Trade is one of the few areas in this realm where the time-space continuum are totally irrelevant. You're not missing a sale. You're not missing business. You're not missing, because there's always trades. The markets are virtually open 24/6. And there's always another trade. There's always trades to be had. There's always markets moving. So you don't lose anything if you don't make a trade today. If you sit down today, you're not making trades. You're evaluating your past performance. You're not losing any money. You're not a retail business where you're still paying rent and paying your insurance and paying your employees. Nope. So figure out how you're going to evaluate your performance. Maybe set it up like I do. I stop after every 10 trades and do a full analysis, because this doesn't mean am I making money or not making money. Sometimes markets shift their personalities, and you don't even realize it. But, when you sit down and do your analysis, you're going to see that, the markets have had a shift. So maybe these strategies aren't working as well in this market. So maybe I need to tweak them, or maybe I need to move into something else. You don't even realize it when markets shift into risk off to, yes, you do when they're reacting to something hardcore. But when they're slowly shifting, you don't react to it. So unless you sit down and do some analysis, okay, and look at your trades, okay, and you might see some shifts. So for me, after every 10 trades, I sit down and do full analysis. Now, this applies to both my swing trading and my day trading activities. On average, it'll take me about 3 months to place 10 swing trades, or about 4 days to place 10 day trades. Okay. Now, that's it. 4 days to take 10 day trades. That's about 2.5 trades a day. I know lots of you guys out there getting 10 trades, 20 trades, 30 trades. You're not high frequency traders. You're just trading. I only mentioned a time element here. See how long it takes me to place these number of trades based on my style, not on yours. I'm not telling you you're right or wrong. I don't know how much time you have to devote to trading. Everybody's individual. So what is the number of trades you will use when evaluating your trading activity? Okay. Then what matrix or what performance matrix will you use for evaluating yourself? This is completely up to you. Don't make it overcomplicated. Don't make it a very time-consuming thing. Okay. Now, you also want to identify the assets you'll trade in. This is a very important thing. And I'm not giving these in any specific order. These are rules, and you can put them in any way you want. When I started trading, and we didn't have computers, and you had to sit in a broker's office to have access to sticker tape. Well, you couldn't be a stock trader, a Forex trader. Well, Forex didn't actually exist. And because you either were a stock trader and you were sitting in your broker's office, sitting on the exchange. If you're a commodities trader, you're trading it, sitting at the CBOE, or you're sitting in Chicago, or you're sitting at your commodities broker using his information. But there was no combination of these things. But because data was hard to get and was time consuming to get, today you get data flying at you in every which direction. When I was trading orange juice, to know that there was a strike at the port in Brazil, or the temperatures fell lower in Brazil, or to get the USDA crop estimates was a hard thing to get, because it wasn't a computer. You did research. It wasn't sent to you on an email. It wasn't sent to anybody. It was released. Now, if you subscribed to certain places, you had the right people. You could get it through the ticker tape in your broker's office, but there was no computer. So when the USDA released something, they released it in a press release. Well, this was distributed by mail to people. I belong to all kinds of mail information. So everything came slower. So you couldn't be trading many assets because you couldn't be spending all the time finding out all the data. Today, we have one platform that offers you cryptocurrency, offers you stocks, offers you exchanges, offers you Forex, offers you 1,000 different assets and 1,000 different categories. And again, I see all you guys out there, and I'll talk to somebody who said, well, I traded Apple this morning, I made a couple bucks, and I traded some Bitcoin today, I made a couple more bucks, and then I just went over and opened up a trade in gold. I'm lost. Okay. Because they're all over the place. They're like the hit and miss trader. You cannot be an expert in all of these. You can't even be keeping accurate charts in all of these. You can't be tracking all the data. So you're just a hit, a fly in the night. Sooner or later, you're going to end up losing your money. So, pick an asset or pick a group of assets you like to trade. Trade the euro when it crosses. Trade precious metals. Okay. Trade high-tech stocks. Okay. But become an expert at them. Identify the assets you want to trade. Because if you're actually following a trading plan and doing all your proper research, doing all your analysis, you don't have time to trade all those trades in those assets. So set your goals. It's very important. Because a goal without a plan is just a wish. Figure out the trading strategies you want to use. Determine your daily core support and resistance levels and draw them on all your charts that you're looking at. Okay. Decide how you're going to place your stop losses. And your stop losses have to have very specific rules, okay, that integrate with your risk management. And you need to have them written down, not your stop loss for this trade. How are you going to determine your stop losses? How are you going to determine your exit? When you're going to exit? How you're going to exit? You know, whether you're going to use trailing stop losses, whether you're going to use guaranteed stop losses, whether when the asset moves in your favor, you're going to sell half it, close out half your contract, and keep it moving. All of this is part of your own individual plan. Again, keep it simple. An exit strategy should be as simple as when the asset crosses below a moving average or an indicator moves into overbought, or I'm going to get out of my position. Now, the other thing is you want always in your plan, how much money per trade can you risk? Okay. And how much money can you have open in trades at any given time on your platform? Because what you want to do is you want to constantly control yourself. So you could say, okay, I'll never open a trade more than $500, margin, and I'll never have more than $20,000 in open positions at any one time into my platform, my trade. If I have a new trade coming up and I have more than that, I can't open the trade, because these rules will keep you, and these limits will keep you from getting too involved, too heavily into the platform, too many trades going on. And then the other part is, when do you take breaks? Now, I have a rule. After 100 trades, which in my case, okay, when we talk about 10 trades, would take me 4 days. So after 100 trades, or about 25 days, I take a break. Doesn't mean go on vacation. It doesn't mean a holiday. It doesn't mean, oh, well, I took off Christmas and New Year, so no. After 100 trades, when I finish my analysis of my last 10 trades, I then I take 1 day and I don't even turn on my computer. Because what you're doing is you're exercising control over your markets. It's like an addict who gets sucked in. Okay. If you could say, today I'm not going to smoke, or for the next hour I'm not going to smoke, or for the next hour I'm not going to drink coffee, well, then tomorrow you can go up to 2 hours. You're exercising control. Okay. And also, you should tell yourself always, if you lose more than 2%, and you set your own guideline of your trading capital at any one point during the day, close out your positions, close the market, close the platform, and walk away, go fishing. But also, if you have a great morning trade and you make a huge amount of money, do the same thing. What happens, if you have a very good trade and you make a lot of profit, you get very cocky, and the rest of the day you start throwing risk, and you get too risky. Okay. If you had a bad morning, or bad whatever, a few hours, okay, you're going to get more desperate to cover your losses. Nope. Close down your computer, close out your positions, go away, come back fresh tomorrow. Now, as I said, this is the only trading plan I could find on the internet, and this is not a trading plan. Okay. But it's, how many trades will I measure my performance? What time of day will I enter positions? That's another thing. Well, we talked about what time of day. Okay. What time of day must I close all my positions? How much will I risk per position? How much will I risk per trade? How will I find the stocks I want to trade? When will I exit a winning position? What will my trading edges be, or my strategies? And how will I measure my performance? And how many trades do I trade before I take a break? Okay, but this has to be written out in detail. No, you can use beautiful, you can use little boxes. You can use Excel spreadsheets. You can use a business form. But the fact is, you need to have it written down. So I gave you that handout, how to build a 4-point trading plan. It's a good starting point. Okay, start from there and work out. But you'll find that trading is more about analysis, decision-making, writing things down, record keeping, and controlling your decisions. Because you should never be opening a position until you've got everything written down. Okay? You know, the charts on your platform are very good charts because they get direct data feeds. But I don't ever use charts on my platform. I pay for a charting service because I don't want to have access to trade that fast. I don't want to constantly be on my trading platform. I don't want to have the enticement of wanting to trade all the time. So please just take that into your thought process. You know, give Legacy a shot. They'll help you along the way. And thank you very much for joining us, and we'll see you again. Good night now.